Okay, good morning, folks. Welcome to Morning Update. Let's first talk about economic data. Nothing to be released today in terms of economic data that could really move the markets. Tomorrow we have durable goods that can certainly move the markets. Let's also keep in mind that we have an ever-declining volume week shaping up. It's Thanksgiving Day holiday here in the States. Let's take a look at a few of the charts. The 10-year yield weekly chart. I know it's only Tuesday, but I always like to take a look at the 10-year yield on a weekly basis. The question is, are we breaking out to a new weekly high, or are we shaping up for an inside week as it may be setting up right now? It's far too early in the week. Or are we breaking down on the week and we're nowhere near that? So the chart of the 10-year yield is certainly healthy. Odds favor bond bears. And when you have a declining bond, 10-year, 30-year bond, that means the yield rises. So the odds still favor the bears. The VIX, it is at current trading down below a key support level. So we closed out the day yesterday at 12.42, very close to the recent lows of where we generally sell off. So what we're going to be looking for is another move lower on the VIX, and you can see that we rallied off the lows of the day yesterday. Ideally, we get an 11 handle, then we'll start looking to back up the truck on the TZA. The US dollar, very, very interesting chart. This is a weekly chart, folks, and remember last week we broke out above this critical resistance level, which now must act as support. If we close down below it, there's a real serious threat of us coming back down to 99 on the US dollar, because this would be a bull trap or a breakout point failure, as I like to call it. So very early in the week right now to be concerned about the US dollar, but keep an eye on it nonetheless, because this is not a pretty setup. And if we close out Friday afternoon down below this 100 level, brother, look out below for the US dollar, because this rally in the dollar could unravel really quick. And the catalyst could be the Federal Reserve and their meeting in December. And it's expected that they will raise rates by about 100% by the market. And if they do not, look out below for the US dollar. Or even if they do raise rates and their forward-looking statement is dovish, look out below for the US dollar. The transports, a new weekly high. Incredible rally, but very overbought. The NASDAQ comp, new all-time high yesterday, but look at your volume bars. They're declining. They can still get pressured higher. It's a holiday abbreviated week. They can continue to press this market higher on ever declining up volume. You'd swear that it's going to break, but it doesn't. It just keeps pressing higher. Don't short it yet. S&P 500 daily chart, a new all-time high on volume that is dropping off of a cliff. It can continue higher. IWM, the Russell 2000, you're seeing signs of topping action here. Volume is about average. It did drop off considerably yesterday, but we're thinking about shorting the IWM, so it's best to pay it some respect. So let's say closed at average on volume. MACD histogram leveling off. It could still pressure higher. The banks, weekly chart, looking good. Rallied off the lows of the day yesterday. Let's go to a daily. A hollow candlestick yesterday. A sign of indecision. So the test is always at the top. Do we put in a double top, or do we break out and press higher? The probability of us moving higher is very good, so I wouldn't short it unless, of course, we broke down below 21.75. This wouldn't be one of my favorite shorts. PLG recaptured critical support yesterday. Volume very strong. No breakouts yet. So we're not going to look to add to this position, but it could quite possibly well be soon that we add more. We'll watch the dollar. USLV, holding support. Volume is light. I see no reason to add just yet. Nugget, gapped higher yesterday. Closed off the highs of the day. We are, for the most part, in the middle of a trading range in no man's land. I would not go buying NUGT right here, right now. I would rather pay more on a breakout. We don't have that yet. When would I get more constructive on NUGT? If we were to close above 9.84, I would become a little bit more constructive, but really what would get me excited is a close above this upper band of resistance at, let's call it 10. Other than that, we remain in a consolidation. I would not add more here. Now, we did break out an RSI back here on October the 18th. We floundered around, pulled back, and we broke down to new lows, but RSI did not. So we have kind of a divergence setting up here, a bullish divergence, which is good, but it's just not enough to get us wanting to go buy stock. It's just simply not enough, especially with NUGT, which is quite volatile. So we are moving higher on RSI. Higher lows are getting put in. Volume was strong yesterday. So the indicators are looking better, but just not enough for us to go adding more. Perhaps on a retest of these support levels, we'll add more, but not right now. Next chart up, LOP, of which we are short. We have RSI that is at 86.65. And on the candlesticks, we have a doji star formation, a sign of indecision. Now, we closed down yesterday, and I would love to take a lot of satisfaction from that price action, but I can't because volume was so low. Indicators are breaking down some, which is good. Let's go to a 1 hour chart. Now, here was the prior uptrend channel, which has now broken, but take note of this consolidation range here. When we added more yesterday, we were beginning to sell off, but that support level held. So we're not going to add more here unless we rally and then reverse, or if we break down below 55.33. Now, the indicators are all appearing weak. They're putting in lower highs. Ultimate oscillator trending down. RSI is breaking down. In fact, RSI has been breaking down, showing a bearish divergence since November the 3rd. Note how the shares have been breaking out, moving higher, yet RSI putting in lower highs. Interesting stuff. Goldman Sachs, hollow candlestick yesterday. We did close off the highs of the day. We can press higher. Remember, we have resistance up at the 214 level. We can't underestimate the ability of overbought stocks getting even more overbought. Volume is doing exactly what we want, dropping to the upside. Here's a 15-minute chart. Here is our rising uptrend channel. We broke the lower band of support, and we've been consolidating. So I think that we can get another move higher. Again, 214.61 is resistance, and that's probably where we're going to go. Yang, daily chart, consolidating. It was a down day yesterday, but on very light volume. So I see no reason to add here. Perhaps if we break out above $17 per share, we'll look to add more. It all depends upon how the Shanghai Composite looks. LABU, we're in a triangle formation. These shares can be bought, folks. Just use a stop loss right below 42.50. You can add more on a breakout above, let's call it $46 per share. Stokes are hooking up. I like the chart. Good setup here. The LABU puts you 3 times long of the biotech sector. If you're risk adverse, this is not for you. You want to look towards another biotech fund like the BIB, which has less volatility but a very similar setup. And that's it, folks. I'll talk to you throughout the day. Be well.